Hi Sanjay, welcome on Investment Tales with MA.
My pleasure.
So let's start with understanding your journey as an angel investor. How long have you been investing? How many companies have you invested in?
So actually, I've had a long history as a secondary market investor. At one point of my career, I was managing close to about 36,000 crores of assets. So it was in 2013 that I got really curious about all this talk about angel investing and the venture capital funding and so on and so forth. And that is the time in which I joined Mumbai Angels.
Okay.
So you can say that that's when I came first hand with the entire art and science of angel investing, and that's how my journey started. Initially, I would get excited with every company that came to present at a showcase because for me it was like a child with a new toy.
Yeah.
But as the months passed, I realized that it was one platform that gave me an exposure to what was happening on the startup space across a large number of sectors. So I started investing a little after I joined, and by now I have invested in about half a dozen companies, so to say. Yeah. So that has been the journey, and more than the investment part, Nandini, the entire joy of getting to know something that is being built from scratch and then putting your money behind an idea which that you will have very little to play around with. It is going to be somebody else who is going to be executing that idea. I think that has been the pleasure.
Okay. And have you seen any exits as yet?
So not really an exit, but one of the you can say one of the precious investments that I made was in a company when I put in my money. That company was valued at about close to 12 crores, and they have just recently gone in for their Series A round of funding at a valuation of 150 crores. So while it is still a notional gain, I haven't realized that, but it is you can say a sense of satisfaction that as and when this company does decides to go in for the next round of investment, I'm quite sure that there will be an option for a secondary exit, which is when I can then proudly tell you that this is my exit and this is the valuation at which I have exited.
Okay. And have any of your companies started faltering? Do you think that they might shut off?
So that has also happened. Despite the fact that I have not been very reckless in terms of putting my money behind every idea. I've actually been very careful in terms of selecting companies. But yes, there is one company which did show a lot of promise when we invested in that company, and I think it started also on a fairly good note. But unfortunately, I think that company is now close to, you can say, closure. I have very little hope of being able to recover or salvage anything that I have invested there.
Okay. So you've been a prolific and a very deep investor in the secondary market and the listed space. How do you see that to be different from angel investing?
A couple of things that distinguishes angel investing from, say, a secondary market investment. First and foremost, in secondary market, you have access to a lot of information, and that information is available in the public domain. Second, equally important aspect is that when you put your money in a company in the secondary markets, the company actually has some history of performance, having probably seen a few market cycles also, a few business cycles also, and there is a lot of financial data that is available to you. Unlike that, when you invest as an angel, first and foremost, in 99% of the cases, there will be no past history of performance that you will be betting on. Second is that here is an idea which may be backed with an Excel sheet with a projection, but my experience has taught me that the Excel sheets of business plans do not actually translate into its actual execution.
Yeah.
So here also we do get to see business plan and projections, but at the end of the day, you know for sure that when you are putting your money into a startup as an angel investor, it is largely on your gut feel. So to give you a perspective, in equity markets, 80% of the decision is based on data and 20% on gut feel. Whereas in angel investing, 80% of the investment is made on gut feel and only 20% on data.
Super. So, that brings me to my next question. Is there anything called a safe angel bet or investments?
See, when I was a child and I learned cycling, people used to tell me, as long as you don't hurt yourself and bleed, you will not be a good cyclist.
Okay.
Let me tell you, I never hurt myself when I was learning cycling. And if you ask me as to why I didn't do that, because I was an extremely careful cyclist. Similarly, in angel investing, the one thing is for sure, that there is no guarantee that the money that you are putting behind an idea will actually come back to you, even by way of repaying the capital that you are putting into that company. So far as the protection of capital is concerned, there is no safety as far as angel investing is concerned. Secondly, is because since you don't have a lot of past performance on the basis of which you can make some future projections, the safety net comes down even less. And last but not the least, at the end of the day, see, he is an entrepreneur. All that he can do is apply his innovative skills, his resourcefulness to build a business. But he is also going to be a participant in an overall macroeconomic environment and business cycles that do end up affecting various industries. So there is no such thing as an absolutely safe angel investing. What you can do is you can mitigate your risk as an angel investor. So that you can do by the classical way of diversifying yourself across number of investments, or you can be little more diligent in the way you go about investing. And last but not the least, I think the best thing is to learn by doing. People can give you theoretical answers as this is the good way to invest and this is the better way to invest. But I think there is no better way to learn to be an angel investor than to actually put your money behind an idea and then see what worked and what didn't.
Yeah. Another thing that we've seen that works very well on the network level is if people are using a portfolio approach on saying, this is the amount of money that I want to invest, and then actually use a much smaller bit on it for each company that you want to look at. And then say that, okay, when the next level round of funding happens, I'm going to top that up. Do you see a similar strategy that you follow? Do you look at co-investing with other investors, another way to mitigate the risk?
So two things here. One is that if you look at my personal style of investment, I take it for granted that whatever money I'm going to put in a startup as an angel investor, that money is going to be locked in for a reasonable period of time. Unlike say a secondary market, if I don't like an idea, I can exit within the next couple of days also. I take it for granted that my investments are going to be locked in for a minimum period of 3 to 5 years. So that is a starting point. Therefore, what I do is at the beginning of the year, I budget certain amount of capital which I am going to be allocating to angel investing. And then I try to space out that deployment of that budget throughout the year, waiting to see what are the good ideas which would be worth betting on. Now, when I put my money behind an idea, there are 2 points of view. There is one point of view that I might have about a company, and there will be a collective opinion that would be there about a particular startup idea. One of the things which I find very, very useful as part of the network is the post-showcase informal discussions that the members have over lunch.
Okay.
Where you can ask each other what did they like or not like in a particular idea. See, many a times what happens is that your breadth of vision would be limited by how much you know or how much you have read. But that, given the fact that knowledge today is so abundant, you might not be the repository of all knowledge in the world. Therefore, talking to a peer who might be a little more knowledgeable about certain aspect of a business than what you are, will give you a better insight into an idea. Which is why I said that, when I was a new angel investor, I used to get excited with every idea. It's only when I started talking to my peer group in Mumbai Angels that I realized that the ideas which look very exciting on the face of it might also have certain things that we need to probe a little further. So that, of course, is a plus point where you are able to complement your individual opinion about a particular entity with the collective wisdom that is working on that particular idea.
Thank you for being with us on the show.
My pleasure.